Welcome to TradeTheMBA.com. This is John. This report is for the 14th of July. Do a different Wednesday here. Start off with a little bit of crypto action. This happens to be Ethereum versus the dollar here. As we've seen with cryptocurrencies, they've been having trouble ever since some of the big investment banks have started getting into the action in that. You're seeing a little bit more constrained reaction. Of course, we've had white MBI popping up over these, and they've been doing exactly as expected. In fact, this continues to expect weakness for Ethereum to at least revisit the 0%, if not break below that, these current configurations at this particular point. We flip over to Bitcoin from the 60-minute standpoint. Again, we've talked about this where every time we get to that 34K, and that's been going on for quite some time. If we shrink this out, we've been slightly above and below for quite some time, looking back through that. And we expected this to move back to the 0%, and when it got there, then we ended up getting more white MBI spikes above magenta, and that's just led to continued weakness. Of course, if we go to the daily of it, our expectation was to come back and revisit the fill of the positive extreme from, all the way back over here, which was back last year, December. And then if we go even a little further out, you end up with this ultimate lower one down at 21K. That would be a significant retrace. We're already below the 50% from its peak value on a daily standpoint. So significant moves, and if they're able to maintain a bit more stability within them, even if they're lower, that's not really relevant as much as this talk of it being a currency replacement isn't going to happen until there's a stability built into that. If we turn to the ES, we started to push up towards new highs, and then a little bit of weakness started. But again, rising ABM, so the expectation would be to come back to that ABM anyway. We're finally seeing a little bit of drop off, but still well above 33. And finally, the white MBI poking up just a little. Maybe got red below blue, so we could see a little bit more. It's nothing dramatic so far. And from an NQ standpoint, still, it's pretty strong, though. Getting closer, 35. Wouldn't take much. Move back into the ABM yellow would potentially signal a little bit more interest if you have cyan over red DOC. At this particular point, you don't. So what we've done, we've made that high, reset the shakeout, starting back up again. All that happened was the other day we had a positive extreme, so potentially revisiting that low still exists there. From a gold standpoint, just holding on and building. Had its early weakness right here, but pivot up of yellow well above that 33 level, and potential for it to move up towards that 50% mark on the Fibonacci. From the euro standpoint, again, dollar war and all that is going to continue. It's problematic for European countries, the dollar being so elevated, and not necessarily with the justification for it being so. And getting back into that range we expect, anywhere from the 113 to 116.8 range is more practical for at least what we've been reading for quite some time. And so this move outside of it was just about the potential for hyperinflation and that, but it looks like the EU is going to have to be just as liberal with money creation. So all going to balance out in the end. And of course, intraday 5K, we were looking at this weakness that developed early on with this breakout here of the MBI white above, just getting the move of magenta and yellow below, and that led to the move to the 0%. We ended up making new lows, but then turnaround move right here, even if weighted a little bit more conservatively to get that magenta clearly rising above, worked out fine. But then you had DOC over negative 13 as well as green, and then it continued to move up. And once it cleared it, that was just a allowance for it to just escalate, and it did. But as all good things, we ended up with this MBI spike. And once that broke down, now right here is where you had the white move above red, but at that point you also had green over DOC cyan, and in that case you could play off the ABM yellow being above, covering a short and then adding to a short every time you get to that one, and it clearly became obvious once we had the DOC spread where cyan moved above red, green moved below, and it all happened together with the spike of orange, and that led to that clearing of the 0% right there. And then once it was down there, had some decent buy signals that started out, but every time we get going, MBI white let us know that we were going to be coming back to the 0%. Even the most recent one that was towards the end of the day led to that 0% move. And that puts us in after hours where we've just been kind of back and forth, flat negative, with continuing dropping Fibonacci lines here. And even now having the white MBI rising. Of course, we're going to spike out right here of magenta in that, so it could be enough to hold it because we've been green over cyan, so that could be enough to lift it for a little bit, but probably likely to see those low ranges revisited after a spike to the highs. So it's that added volatility that we were kind of expecting to happen here as we moved into the second part of July, and I think that's where things are going to start getting interesting, particularly if you don't have the rise in the cryptos. What we're seeing though is, your stocks like Amazon, Apple, and them skyrocketing while the rest of the market been having some significant difficulties in making new highs in some areas, and if that starts to spread, or if earnings that are about to come out aren't quite what's expected and the projections for growth, because again, you get these added projections where everything is always higher and higher and higher, but we all know that that doesn't exist in perpetuity, and when it starts to flip, it can be dramatic. And we talked about this was going to be this idea of a change in philosophy that would lead to this added volatility. And I think you're starting to see that bear out where some people are like, well, rates are going to have to rise, so let's shift back into more conservative bonds, things like that. And that uncertainty is really what causes some of the market dynamic volatility. You don't need to know all that to be able to follow it off our indicators, but it's just worth understanding the macro construct behind it. As always, though, I will continue to update charts and put them on the Skype chat. We'll talk again later. Trade well.